Welcome to Forex Trading Signals on NinjaTrader, brought to you by Forex Trading Unlocked. And real quick, we want to show you our disclaimer to remind you that this webinar is for illustrative and information purposes only. And also, if you could do so, please subscribe to our YouTube and Twitch channels, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com. In paperback and Kindle versions. We will be going over a couple of these signals and showing you how to use them on the NinjaTrader platform. Okay, so we have the forex-trading-unlock.com website pulled up for you, and if you go along our navigation bar and you go to Tools, you can pull up the NinjaTrader online platform page. So we have a page dedicated to giving you information about NinjaTrader. From it, you can also access NinjaTrader via the link and different parts on the page, and you can get a free download of NinjaTrader as well. So this is a tool that I think that you would really like, and as you see how we use it for our trading signals, our high probable Japanese candlestick trading signals, by the way, you will see what we're talking about. So, all right, we have the Euro-US dollar chart here pulled up here on NinjaTrader. As you can see, excuse me, we have a stochastics running down here, as well as a MACD indicators. Now remember that most indicators are lagging. The only really true market indicators that are in real time are the markets themselves. So what we have here, see this green line? The market sold off for the past couple weeks and ended last Monday on June 21st, 2021. And produce what we call a bullish engulfing line buy signal. So this right here encompassed this whole body of the trading day before. When it does so and settles positive, that is a bullish engulfing line buy signal. What's the nice thing about this is bullish engulfing line buy signals always give you very, very strong, high probable Japanese candlestick patterns. Now notice that when you're coming down, this market's been breaking at a really accelerated slide over a few sessions going into this buy signal. And as you look, you can see that the MACD is still going down into this oversold area, and the stochastics, as you can see, was also down in the oversold area. They did not indicate a cross in the stochastics for another few sessions, and the MACD is still in that overbought area, even though the market has been rallying. So interestingly enough, we have a wonderful tool here on NinjaTrader, this drawing tool, which gives you a risk reward ability here. So here we take the close from the bullish engulfing line, and we're going to bring that all the way down to the low from the prior session, and that's going to give us an upside target up here. So we're going to make it a little bit longer and extend this so you can see it. Okay. So we used the close from the day of the bullish engulfing line buy signal and the low from the prior session. That gives us this target line here. See this green line here of $1.2057. So for our bullish engulfing line that was triggered last Monday, we still have an upside target of $1.2057 using this tool on NinjaTrader. Now the market right now is currently trading right around $1.1925, so you have a little bit more than 1.25 of potential profit yet, and we're trading just above our entry price, which was the close of that bullish engulfing line. So now if you want to learn how to trade this according to our rules and our system, then you have to read the book High Probable Japanese Candlestick Patterns, and it will give you all of the information on how to find price points and other things involved in making this and working this trade. However, for those of you that are watching, we do have the entry point here, and our risk is the low here plus a couple pips. So we already know that our defined risk is $1.1847, so it's only about 75 pips of risk from if you were to even get into the market right now, looking for still a rally up to $1.2057. So right now you're looking at 75 pips to risk around, well, that would be 125, so not quite a 2-to-1 reward to risk ratio. This is a counter trend trade because the market has been trending lower, making lower move lows and lower move highs since the past few weeks, going back to the end of May. Have we found a bottom? Is the bull going to come raging back for the euro? Who cares? We're only concerned about this signal. So right now we have a risk level here where the low is at $1.1847. We are looking for this to continue to firm up and then start to challenge resistance again, and hit this $20.57 price target. Now I think that if you see the high that was set back on Friday, this is a good risk area here. So if you're an aggressive bear, you can be short up against this, but anything above this $19.70, you're on the wrong side, brother, or sister. So I would be very cautious trying to sell into this, at least until you get up to this $20.57 area. Now, if you are an aggressive bull, you already know that our risk area here is this low, and we're looking for a challenge of this target of $20.57. Now, oddly enough, we can also use good old Fibonacci. We love Fibonacci because one of the numbers in Fibonacci, which is also a Gann number, and my favorite number, is the 50% rule. Look at where 50% comes in at $20.56. How about that, folks? The Fibonacci lines up with this price target. Now, do they always line up when you use the NinjaTrader risk-reward price projector here? No, not at all. But when you do have them line up, especially with the 50% or the 0.618 Fibonacci ratios, which this would be, in this case, would be $21.10, that is a very significant confirmation that as far as a target level and also for risk reward, that you are on the right side of the market. Does that mean it's 100%? Absolutely not. Nothing is. However, it does mean that you have a very good chance at seeing this market get up to this point. What happens there? Once it gets there, could it go screaming through it to new highs? Absolutely. Could it be where we start to digest before we go to make new highs? Absolutely. Could we hit it on a dime and reverse and become a big bear? Absolutely. There's all kinds of scenarios that can happen. Right now, we don't care. All we care about is this is the trade, this is our profit objective, and having a confirmation with Fibonacci really, really helps to give us more confidence in this trade. Now, short term, the market on an hourly basis and even on a daily basis is coming off this low, making a higher move high, a higher move low, a higher move high, a higher move low. So as these swing points continue to be in a bullish trend, that helps to support our buy signal. That also helps to support our ability to get this trade to run all the way up to $20.57 before we take a profit and take off the trade. Now, as far as risk, we know that obviously if the market falls below the low here, that we were wrong, the signal is done, or maybe we'll have already tapped that out and been done, and then all of a sudden it reverses gears. Notice, though, how our high probable Japanese candlestick pattern buy signal here, it came ahead of two different indicators, stochastic and MACD, which are both very reliable and used by market professionals around the globe. But as always, indicators like that are always lagging. So we like to have the in real time as it's happening indicator, which is the market itself. So here we have this buy signal, bullish engulfing sign once again, bullish engulfing line buy signal, targeting 120.57. Now let's take a look at another big currency for the Forex traders, the British pound US dollar. This one also had a bullish engulfing line buy signal here. Now notice we had a sell signal in the pound that was formed here back on June 1st of this summer in this year. So it had generated a sell signal that we had to sit on for a week and a half before it did anything. The risk was $1.4249 plus a couple pips. However, it got all the way down to $1.3935 before we got out of the trade, and then still even tanked even lower up until last Monday, where it reversed gears and set us up for this bullish engulfing line buy signal. Notice here once again we had this high probable Japanese candlestick pattern. This was a bearish engulfing line sell signal that was triggered, and And this one is funny because the indicators were oversold for a while and already indicating a cross in the stochastics when the market was going sideways, and still did continue to go sideways for weeks. The MACD did actually turn right around that time, but then it also didn't coincide with the stochastics. So those two, you can see it's good when those line up with ours, so it helps give even more reinforcement, but they are usually in a lag, so you don't want to totally rely on those. So this one, we're going to take off this one so it doesn't look, oops, let me do it, there we go. Okay, let's remove that one. All right, so you hit the drawing pencil tool right here, and this gives you your risk reward level here. So once again, for this bullish engulfing line, we're going to use the close, which is just below the high here on Monday of last week, and we actually go all the way down to the low of the same day because that's where the low is. This gives us a big upside target here. Oops. Okay, here we go. So $1.4222 puts us just below those multi-month highs here for our buy signal. Now this is for using this price tool. Now notice that we had our bullish engulfing line buy signal. Now look down here at the MACD down here. This is still heading into oversold territory. Same with the stochastic. They didn't cross until basically 2 sessions later, where we had set this higher move low. Now we've made a higher move high. On the day we're slightly positive, we're looking for another challenge of resistance. So for our risk on this trade, it's this low here from last Monday at $1.3788 plus a couple pips, and our target now is $1.4222 using this tool. Now, as far as if you want to get into this trade, believe it or not, we are below the entry price. So if you are an aggressive bull, here we go. We have a nice little at least neutral trade to higher trade setting up. As far as being bearish, if you're bearish, just make sure that you are very mindful of the last high that was set last week. If we get a breach above here, just like with the euro, you're on the wrong side. So if you're an aggressive bear, I would be short up against this 140 even basically level. If we get above 140 even, we're looking at 142.22 being a very likely upside target, because that would confirm higher move highs after higher move lows, which is indicative of what? A bull trend, even though it's in the short run, but that's where short run momentum is. So that's something you want to be mindful as far as that. Now, since we used Fibonacci in the last example, we're going to use Fibonacci once again. Now, remember how I said they don't always line up? Well, they don't always line up. 50% right here, 0.618 right here. So, for those of you that are very bullish the pound US dollar with this tool, just giving us a nice projection up to this area here from our buy signal on a risk reward ratio, meaning that for putting on this risk for getting long in this area and using this bottom area as our risk level, this is a good spot for where you should target for a good risk reward level. Now this takes out a bunch of Fibonacci things. So should we get above the 50% level, which we would, if we come out and take out this high from the other day, which is at $1.40 basically, well, that's just below this 50%. So this either is going to be the blocker and we're going to start to fall back on support, or we're probably going to see accelerated buying even through the 0.618 area at $1.4072, and then really drive this market back up to where all this congestion was here. Now expect heavy resistance. This may put the capper on it. Remember, we rallied up to this level here, fell back and digested, swing choppy, choppy up, up, get really choppy here. Boom, we sold off back into this range, found support. Now we're going to start to make our way back up. So really the trade is neutral, wait for a big sell-off, and then look for the swing points going up and making higher move highs and higher move lows, which we are now in the process of doing. So using both of these tools on NinjaTrader, it gives you a very good guidance, and also the ability to find your risk level is very easy. Confirm whether other indicators are lining up with your own signals. So I would definitely suggest that you take a look at the NinjaTrader platform and this is a very good, easy tool that you can use. That the nice thing about it is that you set this up right here on your chart, and then when you shut down your NinjaTrader, it stays on the platform, so you don't have to redo this analysis. So while we're doing this video right here, I have on my NinjaTrader platform, this is already set up, so I don't have to do this again. So tomorrow when the market's doing what it's doing, I already have this price projection here for my British pound US dollar, and I already have my analysis already done for this trade. And for transparency, we are long the euro US dollar and the pound US dollar from last week. Actually taking a little heat on this one, not on the other one. So that's where we're at with those signals. Please remember, this is for illustrative and educational purposes only. Don't try and chase this trade. Watch and learn these things before you actually start to try and implement them and execute them in the live markets. So, and just remember to, when you want to get this information about this, you just come to forex-trading-unlock.com, and you can go to the navigation bar to where the tools are, and you can have a whole page to read up on the Ninja Trading platform, or even on our home page and most pages we have at the very bottom, you can scroll down and you can sign up for it. Once again, you can click it on. Here's your NinjaTrader platform and help you out with that as well. Okay, so I want to thank you very much for your time today learning how to implement trading signals on the NinjaTrader platform. We have some other signals shaping up in the market. We're going to bring you some more videos too on how these things work out. And since we've already saved them once again on the platform, whoops, let's go wait to where we're going. Here we go. So since we have this saved, if you follow us in our next video, so if you subscribe to our YouTube and Twitch channel, you'll be aware of when we put out our next Ninja Trading signal video, and we're going to have some follow-up and see whether these signals actually did work or did not work, so you can be the judge afterwards. So we do this in real time, by the way. This is happening right now. This is not where I made these charts and looked up in the past, and this is all set up in real time. We're doing this webinar live. The Forex market is trading right now. This is the signals that are in motion. These are the trades that we have in play, and we're going to work with you guys and show you these guys, these trades as they unfold and manifest. And we are heading into a holiday market, so we know that since they're on. We're not looking to get into anything else now. We're managing the trades we have on until after either they are stopped out a loser or we get out on a winner, hitting our targets. So because we have the holiday markets, they're thin. We're going to be closed in the US on Monday. The currencies will be open, but they're going to be very, very tight trades most likely. And we have the end of the second quarter coming up on Wednesday. So I would think that third quarter is really going to kick off next week. So that's when we're going to be looking for some action. But right now we have it saved on our chart. Follow us on Twitch and subscribe on YouTube, and you'll be notified of our next video, and we'll see how these buy signals in the euro US dollar and the British pound US dollar shape out. All right, I want to thank you very much for joining us today, and don't forget to check out the Ninja Trading platform, and you have a great day, and check us out at Forex.